Yeah, I mean, Ryanair is normally pretty good at not surprising the market with its results. So, as you said, we can factor in a lot of bad news already. The biggest issue over the last little more than a year now has been the company grappling internally with its own workforce, pilots and cabin crew in particular. They've been negotiating, having accepted a little under a year ago that they would allow unions to represent workforce in the company. They're going through a difficult process right across Europe in union recognition, and it is a complex process because Ryanair flies pretty well across the whole of Europe. They have many unions to negotiate with, and that also embraces different national cultures and outlook, so it's not a smooth process, a one-shot negotiation, but they've made a lot of progress already. That has cost them some strikes, and of course the background is that fuel prices rising. That's affecting Ryanair, but they're massively hedged at the moment, so still substantially protected from most of that rise in the short term. And they've had other cost increases. For example, a lot of flights cancelled this summer from air traffic control strikes also here in Europe. But they've talked to the market about that, and they've already given a reduction in their guidance.
And John, it's one thing to have the strike because you can kind of do that as a cost, put it aside, move on. And we know the company has been working on these pilots' agreements, as you talk about, with the unions. But what does it mean for costs going forward? Do we have a clear indication of that yet? Because something tells me that we could be looking at a new normal for the cost structure on an airline that has always been known for really reducing costs.
I think you're right. I mean, the last figure that I saw quoted, they talked about costs having risen already in the order of 200 million euros from increased salaries for pilots. I guess we will get an update on that shortly. So the cost structure of the airline is certainly on the rise. But if we put that in context of the airline's overall unit costs being so much lower than its nearest competitor, particularly with other high-cost elements such as aircraft ownership and leasing costs. They've got much better deals there than their competitors. The kind of negotiations they do with other key suppliers such as airports also puts them well ahead. And, of course, they have very high productivity too. I think this is part of the delicacy of the negotiations with the pilot force. They can potentially put salaries up, or indeed they have done, but they have to keep high levels of productivity, that is, higher levels of flying hours than the competitors. And if they are able to maintain that, cost levels themselves may be higher, but they still will remain well ahead.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.